As you walk into trade this morning, well, it's status quo on global markets. It's the key differentiation, I guess, has happened in the IT space, where Infosys is on the wrong side of the trade and IT and TCS is really on the right side of the trade. The market breadth is okay, nothing really great or nothing grand can be spoken about it, but the retail activity is still dull and dry. Either retail investors are feeling left out, some of them are feeling frustrated, but nobody really wants to come back and commit because of election and because of the fact that the binary nature of the event. Everybody feels that election, we should wait for the election and then take a market view. So I may sound repetitive with this one, but I just want to put this data out on table about election and market. And we've done some fantastic work here just to establish that what really is the correlation between election and markets. If you've heard me say this before, well, I want you to just reflect over it, which is that 8 out of 10 times, if you look at the history of Sensex has gone higher in an election year, irrespective of the mandate. So that's how markets have moved. 8 out of 10 times, markets have actually moved higher in an election year. Hemang Jani, history is telling us that don't worry about election and move on. But the narrative on the street is that we will take a market view only post the election verdict. Why is that? Why is that you're not able to convince your client that this is a good time as any and one should not worry about elections?
Good morning, Nikunj. I think what is playing in the minds of investors is the fact that for almost about 15 months or so, there has not been any meaningful appreciation in the portfolios, particularly if you leave aside the top 4 to 5 index heavyweight stocks. The performance of the broader market has not been that great, and when for an extended period of, let's say, 12 to 15 months the portfolio gains are mediocre, that definitely weighs in terms of decision making. So I think given the fact that even the earnings growth has not been that great, and you have a major event coming up, so that probably would put people into some kind of a tight spot. But I think if you look at the overall retail activity, particularly in the month of March, in terms of the mutual fund inflows, that has definitely improved. So I think yes, I agree that the participation has not been that great, but given the fact that March has been a much better month, and you have an event like election which will bring in a lot of volatility, so I think the retail participation from here on can increase.
Hi there, Hemang. Good morning. No signs of a breakthrough when it comes to the saga at Jet Airways now. It seems like the talks have really drawn a blank. There is going to be another crucial board meet that will extend today. What's the worst case scenario you think for Jet Airways in light of this, and thereby what's your view on the stock?
Well, clearly it's a sad episode for the Indian airline industry that one of the best performing airline is going through this kind of a period, and the fact that it's taking more time to get in the funds and to really bring in a new investor is not boding well for the company, because as we all know that international operations also have been halted, and if they are not able to get the intervening relief in terms of funds, then the domestic operations also can affect. So I think it's not a great news for the company, for the sector per se, and let's hope that over the next few days they are able to at least get some fund infusion. If we have a very strong investor coming in, then it would definitely mean that somewhere we would see worst case scenario playing out, and the stock can start stabilizing from here on.
Hemang, hi, morning. Wanted to understand this entire Nestle India royalty issue. While it's not a bizarre case like Jubilant Foodworks, and I guess a royalty over here is only, justifiable, but do you think this is going to go down with with minority shareholders, if indeed the quantum is a little too high?
See, Aisha, this royalty issue has always been there for many of the MNC companies, and whenever there is a some increase or there is a new proposal, there is going to be a lot of media hype around it, and there can be a bit of a negative knee-jerk reaction. But wherever the companies are very strong and they enjoy this kind of a brand and a product franchise, I don't think the market is going to be too much worried about it. And in case of Nestle particularly, if you see, last year has been good. They have been able to win the market share. That entire controversy around Maggie has really died down, and the company has started really doing pretty well on the volumes front. So I don't think we should read too much negatively into this royalty issue at this point of time.
Hemang, I don't know if you track this one, but suddenly there is a lot of interest in the insurance space. Do you think this is pure rotation, because there is a limit to how much private banks you can buy? You will not buy PSU Bank, NBFCs, you are in a double mind. So do you think this is migration of flows by not by choice but by compulsion?
Well, I think, Nikunj, it's possible that some part of the money which is meant for investment in the financial services space could move into the insurance space. And if you notice, for the last couple of months, we've seen major deals happening over there. ICICI Pru, we could see a big investor coming in, and from there the stock has actually recovered. And I think the larger issue for the insurance company has been there, the company like Prudential ICICI, which has a larger dependence on the ULIP related products. There is a sense that the dependence will go down, and overall in the pure term plan segment per se, the companies are delivering a very healthy growth. So I think a combination of this new money coming in and the fact that the ULIP related issues have actually played out, people are becoming a little more positive, and probably partly also because some of the companies could also be included in some of the indices where the rebalancing is happening, will also bring in an element of new flows. So I think a combination of these factors are playing in, and we continue to be positive on that sector per se, and our preferred stock is definitely the Bajaj Finserv, which has both general insurance as well as life insurance, and is quoting at a discount of about 12 to 15% to HDFC Life and ICICI Pru.
Back to the Polycorp issue, and Hemang, it's good to see that the IPO market is thriving again. The subscription numbers were absolutely amazing. Now, what is so unique about Polycab India Limited that it attracted that kind of an attention? I'm looking at the return ratios. The return on equity is about 15-16%, very ordinary, not the best if I do a peer comparison. Return on capital, not even 25%. P multiple at the IPO price was 22 times, which does not make it the cheapest but not the most expensive issue as well. Why do you think there was so much of interest in a business which otherwise is a broadly B2B business and less of a B2C business?
I think, Nikunj, if you look at the product range and the business model of Polycab, it's pretty similar to some of the names like Havells or V-Guard or KI Industries, Crompton, etc., where because of the consumer kind of products that they have, and there is a decent amount of volume growth at about 12 to 15%. I think the sense one is getting is that Polycab could be one of the companies that will fit into that particular segment, and particularly in certain areas they have a very decent market share, and they are also moving into those newer categories where the growth could be in excess of about 12 to 15%. So market at this point of time likes to move into these kind of niche companies with a decent amount of brand volume growth in excess of 10%. And we've not had any major IPO pipeline per se because of the weak sentiment in the broader market. So whenever you see a new kid on the block, there is going to be that positive excitement around it, because merchant bankers would also have their bit to do in terms of pushing it. So I think it looks to be a decent company in terms of investor perspective.